the panel of speakers, Mr. P.R. Rajagopal, ED Bank of India, Mr. Rajan Paintal, ED Yes Bank, Mr. Rakesh Singh, CEO Aditya Birla Finance, Mr. Ajay Kanwal, MD and CEO Jana Small Finance Bank, Mr. Sabyasachi Goswami, CEO Perfios, Mr. Bhavesh Jain, Chief Revenue Officer TransUnion Sibil. And our moderator for this session is Mr. Mayank Jha, MD and Partner BCG. I request all panelists and the mod to please come on the stage. Request Mr. Mayank to initiate the discussion. Over to you, sir.
Check. Very good afternoon, everyone. So this is the first session after lunch. Let's keep the energy levels a little bit up. After a good lunch. We have a very esteemed panel today on a very pertinent topic. The way we have seen the advent of retail finance in the country over the last decade is something that we can expect with the MSME sector in India going forward. We do believe that the last decade was ruled by retail as a business, and the coming decade will be a very important agenda from an MSME perspective. Let me lay down some of the aspects because of which we do believe in the MSME opportunity. I think as we look at the country, we have a huge MSME population. This will be larger than many countries put together. But if you look at formal finance penetration in these MSME segments, out of a total of 64 million MSMEs, only about 25 million have any sort of formal credit lines. And if you look at active credit lines, they're even lesser. As we look at the opportunity side, this is a very important agenda from an employment perspective, from a GDP contribution perspective. We are expecting MSMEs to be contributing over 40% of GDP in the coming years in the journey to Viksit Bharat. But MSMEs will need to grow, and they will need the right amount of capital to be able to grow. If we look at the unmet demand today, we are staring at a staggering 60% of MSME demand for credit, even unmet today. So this is a sector which is waiting for formalization, and a lot of panelists today have actually taken the journey of formalizing, bringing the top of the pyramid that we see here into formal credit penetration. As BCG, we had done a survey of MSMEs a while ago. And what we had seen was a staring set of opportunities at us. While we spoke about the access to credit, what we also saw was many of the MSMEs who hold a current account with a bank do not hold any other product with the bank. Only less than 50% MSMEs we saw holding more than a current account product with the bank. So this really indicates how banks can go out and take this opportunity to be able to cross-sell more to their MSME customers. When we saw their digital behavior, I think COVID did a lot of change to digital behavior of MSMEs. And most of the MSMEs that we surveyed ended up saying digital sales in their business will keep on increasing. So that is the confidence that MSMEs have on their business in terms of digital. And as they look at what propositions are offered by banks and other FIs, most of the people that we surveyed, more than 50%, were willing to pay FIs for a value-added services they could give along in addition to an account or in addition to a loan. Right? A contrast was how they perceived taking a loan online. And this is a contrast that we had seen. They still preferred that they are assisted in the journey of taking a loan. And hence it means there'll be accelerated investments that will be needed on the digital side, but it will also mean the form of those engagements with customers are going to look different than the retail customers. While the penetration is increasing on the MSME credit, which is explained on the left-hand side of this page, but the credit quality continues to be something that we have to be aware of, especially on the NTC side. This is an important area that needs to be addressed. We see that NTC bad rates are hovering around 5.5+%. And some of the panelists will know these numbers more recently and more closely. But it calls for how do you leverage data for being able to underwrite these customers better and have better fraud prevention mechanisms. Leverage data, leverage the power of AI and ML to be able to detect frauds when we are giving loans to MSMEs. It also underscores the importance of better collections practices in the segment. So while there is a lot of opportunity staring at us, this is a business which requires a lot of thinking as you plan to scale the business up. But what we are seeing is when it comes to underwriting these customers, there is now a multitude of data that is getting available. Earlier, the way of underwriting MSMEs used to be I would go to their business locations, try to assess through subjective discussions on what the business is going to look like. But more and more, the business is moving towards cash flow based underwriting, but not just cash flow based. Now there is a lot of alternate data. Bureaus are maturing. The commercial bureau is maturing in the country. The entity data that is available through digital API integrations with government services, utility services is available to us. There is social and mobile data which is also being available. Now, all of these are increasing indicators, and the real value is how do you read this data and what sense do you make out of this data? And MSME lenders who are able to crack this part of underwriting well are the ones who are going to succeed here. So, to this panel, I think as we think about building the decade of MSME, we are looking at 5 key questions. How do we bring more MSMEs from informal to formal segment? How can industry leverage the data which is traditional and alternate to strengthen the underwriting? How can digital adoption increase? How can operating efficiencies get better so that you can keep reducing the yields that are charged to MSME players? And last, but a very pertinent one, how do we avoid the over-leveraging of MSME customers? They are not burdened beyond a point that the credit culture on MSME starts getting disrupted. This is the agenda. Let me start this discussion and open with you, Mr. Rajgopal. We have seen, PSBs have been at the forefront of getting micro enterprises into the formal fold. Your reach is very, very deep in the country. How do you look at the MSME opportunity and how are you perceiving the growth of MSME as a segment in the country?
See, good afternoon to all of you. I am very positive on this for a very simple reason. The data that you have already presented, it shows clearly that there's a huge opportunity for us. And especially we have been doing very well in micro. So I see a lot of opportunity in terms of actually growing there. And I see a lot of transition from micro to small enterprises. So where, see, if you look at even the standard accounts that we have, which are not DPD, these accounts have a lot of opportunity in terms of giving more credit and giving second dose, third dose, that kind of credit. So we see a lot of opportunity there, and we have been expanding very well over a period of time. In the last 3 years, I have already grown my book almost by 30% plus. Okay, so and added to that, if you look at last year and this year, year-on-year growth, is almost 20% in SME. And my view is that this 20% will continue to be there going forward. You look at these different segments where MSME has been catered to, whether it is scheduled commercial banks or NBFCs or cooperative banks, there is a huge year-on-year growth that we have seen in the last year. So there is a huge opportunity, and then we are very gung-ho about it. We are also doing everything that is required to be done, that you have talked about digitization and formalization, all those things are getting done. Okay, so that is one great advantage. One data point that you have said, which I would like to actually add, is that 5.8% is delinquency ratio in new to credit customers. You look at the proportion of new to credit customers in MSME universe, it is almost 41% and continues to be 40% plus in the last 3 years. So naturally you will see delinquencies. So what I see in MSME is a lot of formalization has started happening. People are coming and borrowing, they understand. So there is a lot of education that has happened through fintechs. And like you said, a lot of ERP systems are getting managed by them. Accounting systems, receivables are easily accessible to them through apps. So there is a lot of opportunity for us to look at. Accounting is better now. So we see a lot of opportunity there. Thank you.
Rajan, maybe if I can pick your brains next. How do you see MSME as a segment? What has happened post-COVID? How are their own individual businesses looking like? Is this the right time to keep driving growth on the MSME side? What excites you and what makes you cautious?
Okay. So you asked many questions in one question actually, but let's go one by one. Should a bank or an NBFC be excited about the business? Obviously, yes. It throws a huge opportunity. The segment is doing very well. Post-pandemic, obviously, a couple of things have happened, but it's important to first dissect the business to understand it fully. When you talk of MSME business, first of all, if you keep the term loan aside, which typically is in the domain of the NBFCs, but if you look at the overall working capital management, then this includes a proper understanding of the trader or the manufacturer or the services sector, so whichever sector you are rendering to. And while at the underwriting stage, this business still hovers at around approval rate of 60%, 50 to 60%. So when people talk about penetration, the first question which comes into my mind is that, is it reaching the last mile or is it first servicing whatever is coming in your hand? Because that is equally important. The third part is through the relationship management, is this customer only looking at the lending opportunity or is he looking at beyond, right? Is he looking at you as a partner who can provide him the solution for his business? He's not looking at only one lending product and there are 10 banks or 15 NBFCs to kind of give him the lending option, but he's definitely looking at much beyond. So this is, just to kind of summarize. From a perspective of post-pandemic, I think pandemic has taught that even MSMEs have to look deeper into their organizations, what they're running, and the organizations have to be extremely efficient in running. So efficiency, digitization, GST of course was in the running, but it got momentum post that. So a couple of things have happened post-pandemic which has made them more organized from that perspective. Reacting to the second part, that what are the risks, obviously irrational exuberance in any kind of lending is always counterproductive. So sooner or later you have to pay the price for that. While the market is large, you need to have prudent underwriting systems, and which can include fetching the information today, fortunately, which is available. Apart from that, your underwriting processes, the touch and feel is important. But I think the risk in MSME lending, like corporate lending, goes even beyond the lending part when you are approving, right? Because at the time of approving, if he is very good, that doesn't mean that he is going to continue to be good. And hence, if it is a cash flow lending, which it is, I think post lending also you have to be cognizant of the cash flows, and which actually goes through a process of more products to the customer. He needs a current account, he needs a collection account or a current account, he needs CMS, he needs better cash management, he needs trade products, he needs Forex if he is into the EXIM line of business. So he needs various products, and of course, you have a tight eye on how his transactions are going in. So what used to be a physical inventory process, today you can possibly have your systems tagging on to have a close check on the velocity of funds, also on the GST and other information, which gets you insight from time to time. And at any given point of time, you would always have some clientele which you will have to exit. And there is certain clientele which you can take up in your exposure. So unlike the retail funding where your decision is once the term loan is given, then the story is over and then you do not have much control. I think this is a process. If you have prudent practices, you will not actually suffer in this segment. And we have seen over the years how the delinquencies remain under control. But one line which I always keep on repeating, that when you're going for MSME lending, collateral should be the last thing you should look at. Look at the cash flows, look at the headroom available for his doing the business, and look at what kind of prudence he is maintaining in controlling that business. And post that, at the back end, you should have a tight control on his entire business going on.
I think this last point around cash flows, not collateral, I think this resonates a lot in our work as well. I mean, as you think about underwriting, it is really the ability of the business to be able to generate works best in terms of management of delinquencies. Maybe shifting gears to Ajay. Ajay, your bank has worked a lot on the micro segment side. How do you keep that engine going in getting more micro SMEs into the formal fold? And what is it that you really look for?
Thanks, Mayank. So, I mean, our experience with the micro enterprises really is, they lack formalization. And so you need to build a risk model which kind of accepts that. And you're able to then lend on a basis of less formal numbers, right? So let's say you have a bank statement which is light. You really want to then figure out what is the other mechanism to figure out what his turnovers are. And that means a bit more harder work. So the informal segment remains unaddressed because it's a lot of hard work. But as long as you're able to put that kind of hard work, then you can address that segment. On our side, we've also figured out that it is better that we are analytically driven. So we built a customized scorecard to address the micro segment because you really get very clear patterns of how they behave. Secondly, we go to once we bring them in, and we may not bring them to the full potential they need, we then educate them on how to formalize themselves because ultimately their growth is in formalization. whether it's with us or with the larger ecosystem. So that's the second piece. I think thirdly, you spoke of digital, so there again, the more they're digitized, the more they're formalized. So then, getting their QR codes to their businesses, like Rajan mentioned, the current account in the banks, getting them to really understand a bit more around taxation, helping them with other accounting answers, really getting them to the fold of, I will only grow if I formalize. We do that on a continuous basis. But like I said, it's a little bit of hard work because at the start point, they don't have the data that typically a bank would use. We spoke of cash and collateral a minute ago. See, when you're not sure of exactly what income it is, collateral always helps. That keeps him honest. And at some point, then you can start diluting that.
So, Ajay, maybe given that micro is the real formalization opportunity, let me ask a follow-up question. You mentioned that the informal segment actually has limited data availability to be able to get confidence on starting to lend to them. And you said that we have to go and do a bit of hard work. Does that mean that that hard work is going to be human intensive? Do you see tech breaking this sort of compromise in your business? Or is it to say that, if you have to formalize the informal, it is going to be very, very manual and very, very hard work? What are you seeing in the business?
Our experience till now, it's a hybrid model, which is I just can't depend only on the person, which is why we have customized scorecards. We have as many APIs as possible to check all kinds of data. If he signs up for it, whether it's his own GST returns or if he has his bank accounts, his tax returns. We would also, but let's say I don't have enough data, right? I will use my scorecard because I've obviously got psychographics, I've got bureau behaviors. I figure out getting is good. I'll have to talk to his vendors. I'll talk to his suppliers, right? So a lot of data we can pull, but you will need a hybrid model. As you formalize, then you go more towards AI ML. As you go towards informal, you need a hybrid model. I would argue that only a human model is quite risky. That would make it very difficult because you're treating with the informal segment. If you don't have gating criteria, you run high risk of subjectivity. And if you're operating in 200 cities, fully manually, then you know what to expect. So I do think hybrid is the answer, and as you move up, you would reach less human intervention, but more AI ML answers.
Got it. Sabya, maybe if, on a related topic, how do we, given that we are talking about formalizing, how do we get, tech and specialist solutions like you guys put together? How does that help in A, understanding customers better, and B, reducing OpEx?
Okay. So I think while everybody feels technology implementation is the key, I would rather reverse it and say understanding the problem is the key. Implementation is the easiest part. So let's understand what is the problem for the micro SMEs specifically. Because when we talk of SMEs, we are typically talking of the large SMEs, which everybody is trying to capture. The problem is really on the ground, which is micro, which is large part. And even in the SMEs, when we say, your data showed that 40% is into formal sector. Out of 40, also if you go a little deeper, it is meager 14 million out of that only has access to formal. So actually it is not even 40. So that's a problem. Now, and micro consists of the large part. Now, while we talk of micro, what are the top 4 or 5 challenges? First is the access. That means, as Rajan just pointed out, cash flows instead of collateral, but that's not the truth. On the ground, everybody looks for collateral first. So obviously they don't have access. The second is we are a little averse to NTC, we all know it. So we look for a little bit of past data. Again, that goes against micro, right? The next is the kind of complex application form filling itself, it's not easy for them. While we feel as bankers in the room, it's part and parcel, for them it is not. Third being the regional disparities. So there are pockets where the SMEs are catered well, and there are a large part of our country where we don't want to go there for whatever reasons. I don't want to get there. And even SMEs do not have the voice to attract the banks there, or formal financing for that matter. The third being the cultural challenges. So if you look at all of this, technology has different ways to solve. Let's say the first one. Obviously, we all spoke alternate data. There are about now 14 or 17 alternate data that you can use for SMEs. You have already showed that. Udyam registration is going by the year. So are we using it fully, leveraging it fully? No. We have created some programs around it, but not fully leveraging. Apart from Udyam, GST registration is going up. There are obviously policymakers trying to bring many more SMEs into the fold. It may still take time for micro SMEs to get there, but that data point is available. The myth that they don't understand digital, it's a myth. They understand digital. There is complete awareness from 7% in 2007 to about 70% plus adoption is rural. So I think very clearly they understand. Now, if you look at all of this, I think the next big part which the technology can solve is they understand technology and there is data available in abundance. But what we mistake is that we try to bucket all SMEs in under pretty much 4 or 5 criteria. I mean, I still remember my banking days when we used to use industry margins. It still exists pretty much. But you can't fund micro SMEs at industry margin concept, right? Even though you look at cash flow, you have to look at it very differently, right? When we look at alternate data, do we factor in seasonality? I don't think we factor in very much. I mean, there are progressive banks or financiers who does. I will not paint everybody with the same brush, but long way to go. So from a technology perspective, I think all this data is available, like complexity of form filling. We have created a solution where only 2 inputs can fill all your forms and pretty much get to the next stage of analyzing the data. So why do you have to ask the customer or your branch guys or your field force to ask 20 questions? Don't need to, pretty much. So I think the technology is already there. It's just about changing that mindset, making those policies available to facilitate the micro SME specifically to come into this fold. Of course, I can go on and on. There are so many data points that I can talk about, but I think for now, I mean, given the time constraints, I'll limit here.
Thank you, Sabya. And to a related point that you mentioned, there is an abundance of alternate data which is coming. Maybe Rakesh, if I can ask you, how are you seeing the leverage coming from alternate data and being able to drive better underwriting for the business? You do a lot of MSME business. How are you seeing the alternate data playing out? There is certainly a different level of maturity from different sources. GST is a couple of years old now, but new sources are also emerging. There are new fintechs who are also tying a set of data to create their own scores. How are you seeing alternate data or signals beyond bureau working for you?
So, Mayank, in your opening presentation, you showed we have some 64 million MSMEs. 99% of them are micro in nature. Their needs are very micro. Their loan requirements are very, very small ticket size. And also you covered that whatever happened on the consumer side in the last decade or so, can we replicate it on the MSME side? That's exactly how it will play. Because when the needs are small, the cost of delivery to these small businesses has to be digital. And I agree with Ajay that it has to be hybrid, and we call it phygital, and that there can be different ways of doing that. But one needs to build different scorecards, different risk assessment models for small ticket loans. And if you look at, it's just not about you're giving a loan, but embedded finance, discounting the invoices. So it has to link to the larger ecosystem. The small micro businesses has to link to the larger ecosystem. So they are supplying to an anchor. So those things has to be, or they are buying from there. All of that has to really play out. So the way I see it, alternate data apart from GST and the digital, almost 45–50% of the micro SMEs are now using digital payments as a mode. That really brings in a lot of information. Sabya mentioned about technology, user banking statements, analyzing the banking behavior of the customers, some bit of commercial bureau, and that has to further strengthen. And when you are talking about small businesses, differentiating between an individual bureau and a commercial bureau is very, very thin line, because a lot of them are proprietors, and that's how they have built the business. So if we have to go the last mile in the micro businesses, I think their needs are like consumer. Their needs are like very small in nature. When I say consumer, their needs are very small. So they might need a 50,000 rupees loan, or they might need a 1 lakh or 2 lakh rupees loan, and not. And there's no one size which fits all. You need to, depending on the different customer segment, different industry segment, different ticket segment or sizes, we need to have a differentiated underwriting models and different data which flows into the scorecards. So I believe, and I just want to share with you that we have built a B2B platform, Udyam Plus, on which we encourage small businesses to come on the platform, and we have built scorecards and models, and we underwrite them for small ticket loans and provide them. And we want these small businesses to grow with them as they grow big in their businesses. So starting very small and then grow along with us. So that's the need of the hour, because most of these businesses are very, very small, and their cash flows and their established in balance sheets are somewhat fuzzy. You will have to derive a lot of comfort through other means in terms of other data, other scorecards.
So I think this common theme is coming through. What I'm hearing is segment your customers and segment them really to the level of understanding their needs separately. Don't take a one-size-fits-all approach. Every segment, from an underwriting perspective, from a proposition perspective, they all are going to look different, and it is going to be hybrid, because all signals you will not capture from data, especially when it comes to business. I was having a conversation with Bhavesh, and very interestingly, we were discussing about how NTC in retail is kind of coming down, but NTCs in MSMEs continue to stay a good 40%. This is the number that Mr. Rajgopal also was sharing. So, with that kind of opportunity coming through, Bhavesh, how are you seeing the bureau signals there?
So I'll just, all the panelists spoke about how retail has grown over last decade, and where MSMEs, I'll just give some bureau-based stats. So right now we have 65 crore individual information reported on the consumer bureau side, out of which 26 crores are credit active. Means they have one trade line which they are paying on a regular basis. Now, when you compare this with commercial bureau, we have around 3.6 crore reported to commercial bureau. And if I take the benchmark, I say 7 crore MSMEs in the country. So 50% is the current formal credit penetration, which have been ever reported to CIBIL. But out of this 3.6 crore, only 90 lakhs are credit active. So that's point one. And then comparing the new to credit on MSME and retail. So retail side is actually decreasing quarter on quarter. So there were times it used to be around 20-25%, say 5 years back. It has come down to 8 to 10% through the door. On the MSME side, the through the door NTC population is upwards of 40% consistently for last 2 to 3 years. But the opportunity lies in terms of the disbursal of these NTC borrowers, because only 1 out of the 4 NTC borrowers actually been given a line of credit. Now that's significantly lower as compared to a credit tested MSME borrower. Now when we look at the performance, NTC borrowers are not bad. Okay, when I say that a large proportion of the NTC borrowers perform on par with the near prime segment, which is your 4 to 6 CMR. So there are pockets of opportunity here, and the point which all the panelists spoke about is in terms of scorecards and how do you underwrite those micro segment MSME borrowers. So what we have done is actually, with the help of CIBIL, we have based on a segmented approach, look at either an income statement, GST information, or bank statement. We launched the Fit Rank. Now, thanks to UPI, the bank statement is quite rich enough even for a pan wala or a kirana wala. So if a lender has to look at an NTC borrower, basis the volume velocity aspect in the bank statement, you can actually do the risk ranking and tell saying that, are you good enough to entertain this application or not? So that's an important change which is happening, and it's critical that the MSME contribution to the GDP needs to be kept in mind. At the same time, these NTC borrowers need to be brought into the credit fold, because on the retail side, I think so as an industry, we have done fantastically well. I gave some stats. There's a huge opportunity on the MSME side. And also, one needs to look at it that where does the opportunity lie? That the retail borrower is also self-employed. Can the banks, NBFCs look at the retail customer with the lens of MSME? That if you have a borrower who's doing well on a housing loan or a car loan, can that borrower be looked? Because that borrower in an MSME capacity may not have a credit track record. But can you use a combination of individual information, bank statement, GST, income statement, combine it all together and look at even an NTC borrower? So there's a huge opportunity on the NTC side.
Before we move, I want to touch credit towards the credit and delinquency towards the end, and I'll take views. But before we go there, Sabya, one more thought from you would be welcome on how banks and fintechs, how can they collaborate better to deepen, especially the micro side of the business?
Okay. Before I jump into that, I mean, just to add to what Bhavesh was saying, in fact, the next level of the analysis is happening for micro. So let's say one part is to just estimate the income. But the second part is also to estimate the quality of income.
Sorry, estimated?
Quality of income.
Volatility. Yeah.
Right? So if you go a little deep in the bank statement or the GST or the Udyam and the other alternate, you can even figure out what's the quality of income. I think that's very important when you look at NTC, because you are trying to just assess the income and basis which, because there is no past record. So those are available today. As far as there is an open acceptance, I think all this can be rolled out slowly. Also, it is important, let's say I'm a micro SME. Where am I spending? Am I spending to buy raw materials for my stall, or am I spending every day evening in a liquor shop? Would you want to lend? So there are multiple dimensions, behavioral dimensions also, which has started coming up. Whether somebody wants to take that step forward is the question. But data points are available. Just to add to that. I mean, I think EPFO, everybody thinks it is important for salaried employees. Who says so? There are more than 10 million on EPFO from an SME perspective. Should we look at that? Of course we should. So I think we have to start thinking very radically different than how we have been thinking from an SME lending perspective. That's the point. Okay, coming to the next point, I think very, very relevant topic. I always associate fintech and banks. There has been talks, rumors, noise throughout the decade that they both are competitors. I never thought so. Personally, because I have traversed this journey. The reason I'm saying so, when we started Perfios and we were there knocking the doors of the banks, obviously we were liked, disliked, not accepted. Today we are. So we have traversed one journey. And I think why I'm mentioning this specifically here, because I think that's how the collaboration should happen. The first is, when we started, we were just treated as a vendor. Come 2015-16, we started being treated as a partner. So it was after about 5-6 years, we started in 2008. I'm talking of 16, so 8 years. Come 2020, we have become pretty much a consultant. So the partner, a vendor to partner to consultant. I think every collaboration between fintech and bank should traverse that journey. You will directly not achieve a status of consultant, where you are discussing the pain areas and trying to solve. Ideally, that's what the state should be. So if that is done, then I think any problem we are discussing today, because the topic is SME, but all problems can be handled in a much better way. Now, when we talk of micro SMEs, I think the first thing is, whom are you partnering with? That means, because bank is the big brother here, let's accept it, okay? Because they are taking the risk, prima facie. So whom are they onboarding as a partner? Is the experience relevant in that area? Do they understand the space well? Have they dealt with some problem statement or use cases on the micro SME side? Whether it is technology or whether it is product domain. If they have, then I think the collaboration will go well, and the problem that we are trying to address from a micro SME perspective can get done. Now, there are different aspects from technology. It can be at an onboarding stage, it can be at a due diligence stage, it can be at a cross-sell, upsell stage, which Rajan mentioned. It can be the most critical part of lending, which is collections. You want to lend, of course, but how do you get the money back? There are technologies, but I think those technologies are mostly trying to bucket your so-called recovery into a different risk zone. But who actually does the hard work in the field to get the money back? I don't think that has been solved completely. I mean, technology has not been able to solve that completely. But I think if these factors are considered while the fintech and banks are collaborating, the partnership will be there, and you will get more better results. That's what I feel. I mean, of course, there are many more things that you need to see the sustainability of the partnership.
Yeah.
Because the bank is investing heavily on a program. It shouldn't be that the partner is fly-by-night operator. Cannot be, right? Or the sustenance is only for 2-3 years. Because you want to make the program successful when we are talking of collaboration. That's what I feel.
Okay, now a very pertinent part around customer stress and delinquency. Maybe I can start with Mr. Rajgopal here. Sir, if we look at the delinquencies on the books, on the one part is on the PSB side, but also the other part on the micro side are elevated. Is it the cost of driving entrepreneurship in this country?
Yes, of course. Because you have, you cannot actually, unless you try, you cannot build the model, as simple as that. You cannot simply conceive a model and say it will become successful, it will not. So we'll have to keep on trying. So we have, as you rightly said, most of them. So you have models which have been built over a period of time because of the experience that we have gained. So delinquency is an issue in MSME, and it is not new. It has been there for so many years now. So I have been in this business for 32 years now. So I have seen bigger delinquencies than this even in MSME sector. It continues to be like that, but we should know how to handle it, how to actually kind of manage that better, and what level of delinquencies are acceptable to us from the point of view of risk appetite is something that we have to think at the organizational level. Now, that is one point. Another point is how do we handle this? So there is a structural problem. I see that as a structural problem in terms of how we actually look at the entire loan life cycle of MSMEs. So there is a lot of bundling that happens in most of the banks. PSBs, of course, it's much more. Basically, the problem is sourcing and then due diligence, basically identity verification of the customer, which Sabyasachi was talking about, and thereafter onboarding them, and then underwriting, and thereafter collections, and then dispute resolution. These are all handled at one level, and they are not actually, there is nothing happening in terms of areas where we can actually strengthen this process. Everybody talks about underwriting. So the point is, all these processes have to be unbundled. That's what if you look at the whole Woken network that Nandan Nilekani has been talking, he is talking of actually democratization of credit. Democratization of credit can happen only when there is a democratization of data. So democratization of data means data requirement at each level is different. So you have to unbundle all this and create very good kind of excellence there so that our risk management becomes better. Risk management for MSME cannot be kind of umbrella type. It has to be very, very clearly identified at different processes. Then you can have an umbrella type. So this is what is, that's how you manage the stress. So that we are all discovering as of now. Maybe another 2-3 years down the line, considering that a lot of surrogate data is available, we'll be able to figure this out better. So then naturally there will be a lot of improvement in terms of stress. If you look at, I was really surprised at the, if you look at the annual report of RBI, the stress levels of cooperative banks are much less than public sector banks and others. They also do a lot of lending to MSME. They almost have 6% share in the MSME universe from the cooperative banks. Their stress levels are much less than compared to others. How do they do it? Maybe because of Connect, they are able to do it better, I don't know. So that we'll have to find out and see how we can actually do this better. Where, as rightly said by Rakesh, so it should be a phygital model where we actually adopt both physical as well as digital in terms of managing this process differently. So my idea is basically if you want to manage stress in MSME, don't get stressed with stress in MSME. Try to unbundle the entire process.
And maybe this is my last question, and Rakesh, this is to you, but Rajan, any other panelists, feel free to jump in. As an industry, how do we build a better credit culture when it comes to MSMEs? This is being done very actively on the retail side. We are hoping that those messages go through. But how do we build a credit culture, and also how do we help the right MSMEs, with the right intent, when they are stressed? What should the industry's approach be?
So going back to what Bhavesh mentioned in terms of deepening and strengthening of the credit bureau, because on the consumer side, people know that once they have defaulted, they will not be able to borrow it again. So I think that culture in terms of discipline has evolved over a period of time, and here also on the commercial bureau, it will evolve over a period of time. See, it's just not about MSME. Any lending which you do, I think getting stress in that portfolio will create a lot of stress for all of us sitting on this platform. So, and what we do is, in lending, you give loan for 2 years. If it's a secured loan, 10, 12 years. If it's a home loan, 20 years. And you look at the cash flow of the individual or the entity right now. Can you predict what will be the cash flow 3 years down the line, 5 years down the line? You don't. So that's the reason I think our models have to be strong enough. It has to evolve over a period of time. Our scorecards, our underwriting models. And today there is so much of discussion around stress in unsecured lending. That's on the consumer side. So similarly, on the MSME, so we have to price for risk. We need to have a strong collection mechanism. When I say strong, does not mean you go and hound the customer, but in terms of I think predictive models in terms of where we can go and
the
early
monitoring
warning.
aspect that Rajan was talking about.
Yeah,
You know, how do you monitor?
just monitor, early monitoring and all of that, early warning signals, whenever, and awareness, a lot of awareness. I think Ajay had mentioned in his opening remark that awareness, making them aware that if they have to come back and continue to take debt from any institution, they have to have that discipline. So I think a combination of all of this is what is needed to strengthen the behavior.
Anyone else?
Yeah, Joe, I'll just add to what Rakesh mentioned in terms of we are working with financial institutions to create a credit education sort of culture within the country. On the consumer side, I think so there's a good amount of awareness and consciousness that you need to pay on time, you need to have a good credit history, you need to have a good CIBIL score. Same we need to do as an industry is educate these MSMEs. One is in terms of getting them access to formal credit sector. Second is ensuring that they feel comfortable that not just in terms of business cycle based, but they pay on a regular basis and instill that culture of responsible credit sahi hai. That dukandar or that MSME needs to be educated consistently.
I only want to make one point, which is very important because generally whenever we speak about MSME, people speak about the opportunity available, the growth potential, NTC and whatnot. Unlike lending, the MSME is also instrumental in structural development of the country. And hence, this has to be the most responsible kind of lending by the lenders, right? So instead of looking at the kind of opportunity and the kind of growth which you can see, once the banks create an impression that it's a toxic segment because of the faults which they do, that can give a bad name to this industry. Hence, it's very important that when you're dealing with this segment, it's a highly remunerative segment. There are a lot of cross-sell opportunities available, but this also has to come with a responsibility to ensure that you apply all prudence, whether it comes to underwriting, whether it comes to your product selection, whether it comes to your collection machinery, whether it comes to education of to the customer in terms of applying the right measures to collect or to pull him out of the delinquency. It's a very responsible lending today. If India has to really go for that dream of 30 trillion and 45 trillion, whatever numbers we throw in the air, it's important that we do this lending with a lot of responsibility and hence manage and maintain the prudence which is required in extending this segment.
Here we are at the end of the panel. There may be time for 2 or max 3 questions if there are from the audience here.
Good evening. Hello. Yeah, hello. My name is Muralidharan. I'm from Hyderabad. I run MSMEs. I run multiple MSMEs. So I want to talk from the MSME standpoint. All of you are talking from the banking standpoint. 2 things I want to highlight. I've run multiple MSMEs, multiple banks. Fundamentally, I think one of the points made here was MSME is a special segment. You cannot extrapolate your experience from customer bank, consumer banking, or from large-scale banking. First thing is, MSMEs don't want transaction banking. We want partnership banking. What does it mean? Transaction banking is all about, when you come to the bank, the first question is, what do you want? What loan do you want? What do you want to do? It's not the question. The question is, if you're a partnership mindset, what business are you in? How can we help you? Which is the business? Where is it growing? What kind of growth capital you need? This kind of conversation we don't find at all. So we are talking nice things about banking, but we don't understand the MSMEs are not looking for concessional loans. We are not looking for low cost of funding. We are not looking for speed of lending, which is what fintech gives. We don't want any of them. What we want is responsible banking and a partnership banking. Partnership banking means sit down with me, and maybe we need intermediation because the bank doesn't have capacity to provide this kind of consulting. So why can't we have intermediation? If you have intermediation for a home loan, you have an agent for a home loan, you have a personal loan agent. How come we don't have an agent for a MSME loan, which sit with especially micro and small industry? For example, one example I'll give you, onboarding. The worst onboarding you can get is only for MSMEs. I've worked with 5 banks. Not a bank has called me and spent 2 days in a training center. You train employees. You don't train the bank or promoters of MSME to say what kind of facilities are available, what kind of products we have, how can we help you, where did we go. There's hardly any onboarding at all, 0 onboarding. So I think you need to change your mindset from transaction banking to responsible partnership banking, and that requires a completely new shift. And last point I want to say that I think MSMEs are the job creators in this country. So all of us, the banks have to realize if we don't create, you don't create employment, there's no demand in this country, and therefore we provide a lot of services to the entire banking industry to increase consumption. Thank you.
Thank you. Any questions?
Financial institutions always are looking for credit worthiness. But can I ask any panelist, last 10 years, you had seen the balance sheet, but whether you had seen any, your customer or visited the 10 customers to look at their factories. I'm talking about the industry perspective, to visit their factories, what is their, I say, pain, gain, and contribution. Either that is a struggling company or either that is a growing company. I want to hear from Mr. Rajagopalan onwards.
So we have been looking at it. For that, now our friend over there who has actually given good suggestion. At our bank, we have credit counselors. We have quite a number, around 250 plus credit counselors are there who give you idea as to what, because this is a good idea which I have actually picked up from some of the chambers of commerce I have visited. They said that you need them to understand how to manage their cash flows and credit, so you need to advise them. So we have created that ecosystem within the bank. Of course, it's maturing very well, that I can say. And so far as your point is concerned, we are not present greatly in medium segment because none of the public sector banks has great presence there. No, we are mostly into micro and small enterprises. So we do take care of small and micro enterprises very well and go there. And if you look at the proportion of lending in our book, it is actually 50-50 in terms of manufacturing and services. So wherever manufacturing is there, we do go and visit and see how they are doing their businesses, because inspection is one of the important things that we do. We do a lot of outreach programs in terms of bringing on those customers and doing that. So that's what we have been doing on a continuous basis. As in terms of credit worthiness, it is a debatable issue. We can keep on, what is credit worthy today may not be credit worthy tomorrow. What is credit worthy yesterday is not credit worthy today. So it all depends on, there are a lot of subjectivity over there. So I don't want to get into that credit worthiness aspect of the businesses, because it is basically a kind of how you cater to them, how you are close to them, and in terms of doing all that, how it matters. So we actually service almost all segments of the micro and small. So naturally, we are in touch with them. And we have, as rightly pointed out Mayank, we have more physical outreach than digital outreach. So our connect to the customer in touch at the ground level is much more. That's what my point is.
About last question, the credit bureau. If the financial institution will not provide you the proper data on time, and if any entrepreneur reject their loan, who will be responsible?
So RBI recently, in fact in April effective, have defined the roles of CIs and the CICs and defined the timeline within which credit institutions need to give data to CICs like us, and how much time each of the entity in the ecosystem, whether CI or CICs, need to revert, resolve, and go back to the consumer. So it's a very progressive step taken by the regulator where everything is defined, and at the same time there are even penalties associated. So if any of the entities associated in that entire consumer chain, then there are penalties defined. So I think so it's a very progressive step taken to ensure the consumer's rights are protected.
Thank you all the panelists for a great conversation. That concludes the panel discussion. Thank you very much.
Thank you all dignitaries. Ladies and gentlemen, we will take 5 minutes to reset the dice for the next session.